All right. Happy Good Friday, everybody. My name is Chris. I'm with Liscio, and I wanted to thank you all for joining. Let's give everybody just a minute or two here to pile into the room. All right. I can see our participants growing pretty quickly here, so just another minute or two. Okay, good. Looks like our count is stabilized. So welcome again, everybody. I know how busy you are. We've been working with a number of you around many issues, not only tax related, but also PPP and other process related. So we wanted to get everybody together today who has an interest to just go ahead and share some of the things we're seeing with regard to the PPP and best practices. So really, in terms of what we're going to be looking at today, we wanted to focus on the process itself, not the program. So I think a lot of what's happening out there, the program is being updated very, very quickly. A lot of people are riding on that. We wanted to go more to the nuts and bolts of the process for getting through the loan application process. So what we're seeing thus far is very much varied in terms of how people are approaching it. And because so few loans have been approved thus far, I think there's 30 million businesses, small businesses in the US. I've heard 200,000 loans have been approved. So still less than 1% of small businesses have received loans. We're not seeing a lot of people come back saying, hey, this process is really, really nailing it. There's a lot of variety out there. So we don't want to say that anything today is going to be definitive in terms of the best process, but we want to share at least what we're seeing in terms of various experiences that firms are having. So with that in mind, our agenda is just a very brief touch on how the system works, lender requirements, what we're seeing there, the order of operations in terms of going through the loan process, and then what we're seeing in terms of how people are preparing the backup for payroll, then gathering signatures and a Q&A. So if you wanted a Liscio demo today, that's not going to happen. We're going to be really just focused on PPP. So the PPP guidance out there is very much fluid. Rules are obviously changing very fast. We saw new guidance last Monday that was trying to clarify. This came out from the SBA again, trying to clarify a lot of the frequently asked questions. And we're seeing some major changes. For example, at first blush, we thought that independent contractors, full-time independent contractors in particular, would be covered as part of the PPP program. We're not seeing that anymore. We think that has changed. But again, other people are talking about that. But this is very indicative of some of the confusion you might see when you go through the application process. Another thing we saw was the EIDL, the 10K grant that everybody's supposed to get within 3 days. That money, we really haven't seen much come out either. And they changed that from 10K blanket for anybody applying to $1,000 per employee with the 10K max. So there's so much change here that when we think about sequencing, we think about putting all the documentation together, one of the things we want to do is we want to fill the amount of the loan out at the very last second, okay? I think a lot of firms kind of went through that before. So that gets to the point of why there is so much confusion in the water. And if we look at the initial guidance, in fact, if I click on this link, this is going to take us to the Treasury Department's website, and they have a lender information fact sheet. So this is the list that the banks got. And you can imagine how much paperwork banks are used to and accustomed to. The guidance that they got initially was this. I'm starting here. I'm going to scroll down just a little bit. I'm going to get to the second page, and that's it. That's the extent of the guidance they got. So a lot of this stuff was confusing to the banks themselves, which caused so much consternation and some delay in process, and why some banks are only now starting to get everything rolling. So if we go back out here and we start to consider how everything is working, really what's happening is the US government's going ahead and saying, look, we're going to back the SBA, and the SBA is going to issue the loans. The SBA is saying, great, we're going to back the banks, right? And we're going to have the banks underwrite the loans. So Treasury says one thing, SBA says, great, the banks are going to do it. So if we go back and we take an excerpt of that PPP lender sheet, this is an important paragraph. What underwriting is required? you will need to verify, you being the bank, will need to verify that a borrower was in operation on February 15, 2020. You will need to verify that a borrower had employees, et cetera. And you will need to verify the dollar amount of average monthly payroll costs. So interesting, pretty thin, right? So what's happening right now is banks are individually interpreting the underwriting requirements. Therefore, what's incredibly important in this whole thing is to understand the lender's requirements before requesting and preparing documentation. And I've talked to ADP, I've talked to TriNet, I've talked to a lot of different payroll companies. They are seeing a wide variety in terms of how this is being interpreted. So when we think about that, then the sequence of the workflow in general should be the SBA loans. So these loans have qualifying questions. More than 500 employees, probably not going to qualify. Staff who are overseas, companies that are foreign, not going to qualify. So we want to make sure that the applicant, the small business, is going to qualify. And you obviously will find that out first. Then when you get to the loan forms, the form 2483, that's going to have disqualifying questions. You can't be a current felon or something like that. So you also want to spend your time making sure they're not disqualified right up front. So once you've done that, the next piece is the toughest. You got to fight through and find a banking contact. That person is likely working all day, super hard every day, all day on weekends. They're going to call you on weekends. They're going to email you on weekends. These people are working very hard. They're the ones that are likely going to control your fate, or at least the firm's fate, with regard to getting more ahead of the millions of businesses that are yet to apply. So see if you can find somebody there. Contact. In fact, I know somebody likely on this webinar helped me find a banker as well. So find contacts, ask your friends, et cetera, based on the bank that you're working with. Once you're past that, then understand the lender's requirements. And this is where we're going to spend a little bit of time in the next couple of slides. The lender's requirements are going to be super important here. Then you prepare your payroll support, and then you get your signatures. So let's talk about lenders for just a second. Lender requirements are going to vary massively. This is from Bank of America's site this morning. And what's important about this is, if you're going to apply it with Bank of America, you must have a small business lending and small business checking relationship with B of A as of Feb 15, or a small business checking account open no later than Feb 15, and do not have a business credit or borrowing relationship with another bank. So basically what they're saying is, hey, we're going to take care of our customers, but if you're borrowing from somebody else, go to them, because they have way too much business. They're kind of turning business away. And if you look at the fine print, regardless of loan size, the Fed is basically paying, I think it's right around $1,000 for the banks to underwrite these loans. So Bank of America's got tons and tons of business, $1,000 a piece, not a ton of money. Not bad money either, but probably relative to the amount of stress their employees are under, not worth it. So anyway, so because there are capacity constraints, make sure your small businesses know the rules here. Okay, next up, let's stick with Bank of America. So Bank of America website, I pulled this again today. This is where things start to get confusing. Bank of America is saying they want for payroll full year 2019. Full year 2019. And we know that the loans are covering 2.5 times monthly payroll for the last 12 months, right? So what about the stub period, January through March? Okay, well, they're going to ask for that. They want payroll report as of Feb 15 or closest date by employee. So they're going to ask for full last year plus part of the stub period. And they're not asking through all the way through March yet. And again, this came from today. So we got to pay attention to their rules. Again, they're setting the rules for how they're going to underwrite these loans. Another thing that here that might be a little bit confusing is they're asking for 2019 independent contractor costs. Now, I think you're going to see a lot of people out there are saying that these are no longer covered, or the SBA does not intend to cover those amounts. Some firms we're seeing are actually including them. And if that happens, there might be a chance that the money will be received, but it might not be forgiven as a grant. Nobody really knows how this is going to work. And a lot of companies have already applied and have already included independent contractor costs in their calculation. So, if you have that banking relationship, maybe don't believe everything on the website. Maybe talk to the banker before you fill the paperwork out. Certainly, we think that would be a good approach. Okay. And then they send you back to the U.S. Treasury website for additional information. So Okay, so that's Bank of America. What about Chase Bank, nation's largest bank, right? We saw this. This came from a Chase representative, documentation of your 219 to 220 payroll, okay? So the IRS will be accepting whatever documentation you have, ideally something from your payroll provider, but whatever you have, you can send. I don't think the IRS is really even involved in this. But the point here is these guys are asking for full year 19. These guys are saying, no, we want something different. So you're gonna have to pay attention to how they are setting the rules, okay? Also, there might be more than just the documentation required or specified under Form 2483. This came from Chase Bank. Additional information for PPP. They want to have jobs created, jobs retained, other information here, and they want to know how the company intends to use the PPP proceeds. They want to know this. And this might not be super relevant right off the bat because nobody knows exactly how they're going to deploy the funds. But when it comes to getting the PPP loans waived, repayment waived, I think what they're really looking for is 75% or more of payroll costs, or 75% or more of the funds being used to relieve payroll costs, okay? So anyway, so Chase wants to see this kind of stuff up front. So this is why you have to get in there, get to a banker, get the forms out, understand the full set before you get to work. So that brings us to the next part in the sequence, which is preparing the payroll support based on the lender requirements, right? So this is really important. If you talk to a company such as ADP, they're getting a gazillion requests. They already had their developers go through and code up reports. So I just kind of mocked a report up here. But this is the ADP header that you'll get. It's going to have the company code. It's going to have a 12-month period for 2019. So this is going to be good for Bank of America, right? Not going to be so good for Chase Bank. But what you're going to see here is you'll have the important data already taken care of. So it's going to show by employee, and you all know that there's a per employee max of 100,000 per year of gross pay that can qualify toward the monthly payroll expenditure. And then only the employer share of taxes and benefits and so forth count toward that average calculation. So the employee share needs to be disregarded. ADP already built that report. That makes life a lot easier. And this is pretty easy to trace back to. So that's going to give you your payroll cost. You'll calculate this for whatever that period that the bank is looking for is, and then obviously calculate the average monthly based on that. So they'll give you a 12-month full run. So a lot of the data gathering in terms of the individual traceable audit trail for this can be generated by ADP, for example. I talked to TriNet. They did not have anything like this. Other payroll providers may vary, but it's worth asking, okay? Then another thing you can do is to substantiate the numbers, you can actually use, let's say in Bank of America's case, pull the employee reference copy for the full wage and tax statement. This would be the full, this came from ADP as well, the full W-2 earnings summary for the year 2019. And what will happen here is this will give them the full amount of employer paid wages, benefits, federal taxes, etc. So now you have that, that'll almost get you there. And then ADP will also provide you with a balancing form. This will help you get from the W-2, W-3 totals to trace it back to the totals on the spreadsheet from the report that they gave you. It'll help reconcile those two. That gets you even closer. Now, a lot of people, now this is only for if you're doing it for the full year. You're gonna have a stub period most likely. So you're going to have to provide additional payroll statements. So the key there is, again, focus on getting a report that shows the employer share, and you're going to want to disregard the employee share. So if you run your standard payroll report that'll typically have the employee's net pay, but it might not show how much the employer paid benefits, how much the employer paid in state and local tax, okay? So, or state and federal tax, I should say. So now that you have that data, make it easy. Make it easy for the employer, or make it easy for the bank to get the employer share of costs, okay? So what what's nice about the ADP report as well is when they do this kind of deal, if we have Dave Lebowski, Dave's making $10,000 a month, okay? By the time Dave gets from January to October, he's hit the $100,000 threshold. And then the report will show that that goes from 10,000 to zero. So when you calculate that monthly average, that's going to average out, right? So this is going to help the banks verify the information that you're giving them is correct. Now, the SBA is very, very clear on this. These reports are the responsibility, not of the accountant, or not of the bank, pardon me, but of the borrower. So the borrower is responsible for the accurate calculation. The bank is performing a test service, right? They're responsible for verifying the numbers look reasonably correct. They're not there to detect fraud and so forth. That's too much of a burden, right? So what you want to do is you want to put the pieces together, or at least what we're seeing is a lot of the firms we're working with are putting the pieces together to get them close enough, to being able just to look at a couple of pages, say, yep, this looks reasonable, and move it through the process. You don't want it getting sent back to you. That's the number one thing we're hearing. Banks are saying, don't screw this up. If you screw this up, you might end up in the back of the queue. Okay. So be very, very careful with this. And, I would just spell out in the column 100K max, right? Calculated here, and tie it back. Okay. You got to calculate average headcount, do it on the same basis. I probably need to cover this too much. You're all more than capable of that part. This one's also really important. Some of your clients might be using a PEO, right? So PEOs are, for example, ADP, Total Source, or Sequoia, Administaff, something like that, where the small business uses or takes advantage of lower benefits costs and so forth by outsourcing, really, I don't want to say outsourcing their staff. They're basically having a representative such as ADP file everything under their EIN. So if that's the case, and I think a fair number of small businesses out there are doing this, if your client is using a PEO, you're going to want to make sure you get a special PEO rider. So this is ADP's PEO rider. Get that from them and include that in the package, because if you don't, the EINs won't match. The EINs don't match, the bank might reject it. So this is a little bit of a gotcha, just to make sure you have covered. Okay. So sequencing again. So qualifying questions, disqualifying questions, get somebody at the bank, get in contact, and I would start calling right off the bat as soon as you've qualified them. Then get their lender requirements, and we've done the payroll support. Then you get the signatures. So signatures can come last. We recommend templatize everything, right? You're going to see the same banks over and over, and it's going to be a heck of a lot easier if everything is created and you can go ahead and fire these through. Also, in case anything changes, you already got the template in there. I think we saw a number of people call us up saying, hey, you know what? The amount changed. I thought independent contractors could be included in the amount. They no longer can. So you got to go out there and you got to get all the paperwork redone. So template everything and then pre-fill everything on behalf of the clients so they don't miss something. So super simple. What we've done, or what we recommend, and if you want us to help you with templates, just let us know. But in the Listio eDocs part, go into eDocs, go to your template library and create your templates. And then when you want to send your eDoc, just fire out here. I'll go to Christine. There she is. I'll pick the one I want to do. This is going to be form 2483. Please sign. And then you'll grab it from your template library. And I've got my PPP SBA form 2483. I'm also going to attach a second one here, which Chase Bank has a specific rider that we saw earlier. I'll attach that there as well. I'll prepare that document for signing. So the things that your client's likely to miss a lot of stuff, right? And then you don't want to go back and forth. It's not enough time. So you got all this stuff set up. What you want to do is, what I'd recommend is you've already gone through and pre-qualified everybody, right? So you know that they're not ineligible because of this question. So you'll come in here and you can actually already set your template up to be checked in that regard. But check the boxes for your client so they don't miss something, right? So these are likely to all be no's. And obviously it's incumbent upon your client to make sure that they read through this, but you don't want them missing boxes, okay? So go ahead and do that. Also, the banks will tell you they're getting a lot of applicants who are not initialing this. If you think about this on a paper form, people are just going down the check boxes, they're missing these little lines. So when you create your template, come in here, always make those initial fields, always make them required, okay? Always make those required. So those two boxes, your banker, whoever you're talking about that, or talking with at the bank is going to tell you that. That's just a major gotcha landmine. And then obviously you have all the initials going down here. So super easy for your client. Send that off, and then you're most of the way home. Okay, secret. We've already gone through the sequence. Final comments. I wanted to also point a couple things out here. We actually have been talking to some executives in banks, and one of the biggest things that they mentioned was the Anti-Money Laundering Act, they call it the AML, has been a monster concern because the banks, in essence, are underwriting these loans. And so when a bank underwrites a loan, they're worried about money laundering problems, because if somebody is laundering money through and they're underwriting fraudulent loans, the bank can be liable for up to 3 times the value of the loan. So the banks are looking at this, and they initially said, and you might have heard about this, Mnuchin got in front of everybody a Friday ago and said, everything's going to start running. We're off to a good start. Over the weekend, or no, it might have been 2 weeks ago. But then later the bank said, we don't know what to do. And a major pushback was over this money laundering bit, this money laundering clause that they have to go ahead and satisfy. And the initial response from the banks was, we will do this, but we're only going to do this if we have an existing lender relationship, not banking relationship, a lender relationship with the small business. Because if they have a lender relationship, such as a credit card or any kind of business loan or credit facility, they've already gone through the underwriting process with that company, and therefore know that they're not going to be potentially penalized later for money laundering. So one of the things that kind of, perked our ears was the idea that if we anticipate more of this stuff going on over time, and if there is a major fraud, that happens as a company writes checks for hundreds of billions of dollars, there's likely going to be a fair amount of money that ends up kind of in the wrong pockets, right? It probably isn't a terrible idea to have all of your clients go through and establish a credit facility, get a credit card, whatever it's going to be. That'll have the bank run all the checks they need to, right? That go beyond what they would normally do. So now you're a lender, now you're a borrower with the bank. That, I think, is going to really streamline things later in the event that there's another bite at the apple or something like that. So anyway, something to think about there. We've never known how important it would be to have a banking relationship. I think we're learning that now. So to the extent you can, cultivate one for you and for your clients. Very, very important. And then obviously, we've had a lot of firms share with us what their experiences are. If you are seeing templates, if you're seeing things that will be valuable for everybody, if you want to send them to us, we can go ahead and put them on our knowledge base. We can make a lot of these forms and so forth available. We can help even probably, I wonder if we can do that in mass, create some field templates. I think we can. We can create some field templates. So if you find another bank or whatever, there's a fair chance we'll have it in our library. We can upload it to your template so you can get through this PPP thing even faster. So I've never done a webinar this fast, but I know you are all super experts. I know how busy you are, and we really wanted to get a lot of this data into your hands quickly. So that's the story. I'm going to go ahead and open it up to Q&A. I saw a couple of things come in. I'm joined by Tim, as usual today. So we'll take a look at those. And if there's any other comments, if you like what we're doing, go ahead. If you don't mind just sending us a tweet or something like that, just put something on the web. That'd be really cool. If you don't like what we're doing, let me know. All my contacts are right here. And we'll try to do better for you next time too. Okay. So Tim, do we have anything on tap question-wise?
Sure. Obviously, we're going through quite fast. There's this initial question, people wondering about being able to access this information later on.
Absolutely. We'll post this. We have a licio.me, our website. We're going to put this up on the videos. We'll have that up for you probably in a couple hours here. It won't take us long.
Also seeing some questions about exactly what is forgiven. Do we have any clarity on that?
Sure. I think, and unfortunately, I think it's not going to work for a lot of companies, and I'll tell you why. But the loan amount is 2.5 times monthly average payroll, and the government's saying they're going to, if you spend at least 75% of the money on payroll over the 8 weeks following the loan date, right? If you spend at least 75% of that money on payroll and the rest on other qualifying expenses such as rent and utilities and so forth, then they will forgive the loan. So what's tough about this is if you're a restaurant, for example, the business isn't going to come back, right? You're not like a restaurant's going to suddenly turn on the lights after they get the check and customers are going to be flying in the door. That just simply isn't going to happen. So, so this current iteration of the PPP is going to be good for some companies, but other ones such as travel and hospitality, they'll have access to the funds, but they might not get the money forgiven because there's no reason to bring staff back if the economy or customers haven't rebounded. So, so again, it's the 8 weeks of payroll after the loan date that matter the most, as far as I know, for whether or not something gets forgiven. But there's a lot of people out there probably on this call who know much more about that than I. We've been more on the process side than on the legal side.
Alan would like to suggest you pay holiday bonuses early.
There you go. There you go. That's actually a very wise thing. Here you go, people. What if you actually pay salaries in advance? Anyway, yeah, we need
we've
more
also had a couple questions about sole proprietorships, loan calculations, that sort of thing. Is there something substantially different with regard to that, or sort of any clarity we can provide around that as well?
As far as I know, loan sole proprietorships qualify just as much. I think there's $100,000 max, so I think you would calculate it exactly as you do for a firm with several employees. Just take your average salary for the last 12 and then 2.5x that. I think you'd qualify. So, yeah. But again, that stuff is moving so fast that definitely keep on checking. But I do believe that's in fact going to be the case, is you can't get the money.
Also, do we have any information about independent contractors applying separately? Is that something that should happen?
It should. It should. And I think where you want to go for that is go to the FAQs. So if you look for the Paycheck Protection Program FAQs that are issued on April 6th, they're going to have quite a bit around who qualifies for this, and they're making determinations for independent contractors working themselves. So I would take a good look at that. My understanding is that businesses cannot claim independent contractors, but independent contractors can potentially qualify, but there are criteria. So it's not just a blanket, everybody qualifies. So you want to take a look at the detailed notes. Yeah, and obviously there's more to it than what I'm covering here. We could go on and on about that in terms of what happens with seasonal workers, what happens with businesses that started less than a year ago. How would we calculate that? There's additional guidance on all these pieces. So it's a bit of a warren once you start getting into the details more specifically. But that's my understanding.
Sure. Sort of pull the loan forgiveness together with the discussion of sole proprietorships. I mean, obviously, they don't have additional employees. That was a part of the loan forgiveness. Do you think they'll get any loan forgiveness support, or is that not something that's going to happen there?
I don't necessarily, I'm not qualified to answer that. I think if anybody here on the call knows or has a better idea of how that'll work, I'd be all ears. And I think this is, from what I've read, there's a ton of angst around this because initially the CARES Act was supposed to supply $10,000 within 3 days to any small business, sole proprietorships included, right? That was going to be forgiven. And then they went ahead and quietly changed it to $1,000 per person in the firm. And, it's pretty fast moving. Tim, has anybody chimed in on that yet?
No, not at the moment.
Yeah. Yeah, so I think it might be an indication, given the number of people on this call. There's a lot of people here. If you want, I can take a look. I know where to look for this stuff, but I can write back on that. But my understanding is there's a fair amount of confusion over what is going to be forgiven because they've been moving the goalposts a little bit there.
Yeah. Do you think there's any chance that the benefits could end up being up and above $100,000? It's not. I know it's not clear, but
Well, benefits can be way over 100,000. I think it's the max is $100,000 for purposes of calculating the average monthly payroll. You cannot include earners who make more than you can't include any amount greater than $100,000 a year per employee, right? So you have, Mr. Lebowski we looked at earlier, making 10,000 a month, 120 a year. You can only count the first 100,000 towards the monthly payroll. But in terms of how much money a company can qualify for, it's 2.5 times the average monthly payroll, subject to certain limitations. So it's a lesser of that, or $10 million. So small businesses can get an absolute ton of money from this.
and also, have we seen any guidance around partner distributions? Whether or not those would count, sort of as a side along to the sole proprietorship discussion, right? The business owners. How does that affect things?
My guess is, I'd be guessing, it's not actually qualified to, or count towards $100,000 max per, because the distribution to somebody who owns the business is very similar to salary. So my guess is it would be treated the same. Kind of like I think, for example, salespeople, you are allowed to include sales commission in that average monthly amount. Sick leave, you're allowed to include sick leave in the average monthly amount. So I think that any kind of partner distribution would likely fall under that same annual compensation umbrella, but would be subject to the 100K per year per employee maximum for purposes of the calculation.
Sure. Obviously, we're digging deep into gossip here for a second, but do you have any comment on the idea that they might be running out of money?
Well, I think the government's already asking for more, right? So I think this has obviously been an incredibly popular bit, and they're signaling. I certainly think that they're signaling that some concern. I can't, for the life of me, and this is just my opinion, understand why they would claim 10,000 for all small businesses and then suddenly reverse and say 1,000 per employee per business. 1,000 per employee per business isn't going to do anything, right? If you're a sole proprietor and you get $1,000, you don't keep the lights on, as far as I can tell. So if this thing drags on, and certainly in California, we're being advised we're going to be indoors for another 9 to 11 weeks, right? I think Governor Newsom was saying that we won't peak till mid-May and have another 4 to 6 weeks after that before we have a chance of going back out. So yeah, I think that's a real deal. I think there's a fair chance that we're going to see a substantial more amounts put into the pot for businesses to claim. And if this thing does drag on, I wouldn't be surprised if this initial CARES bit of 2.5 months of salary is only a first bite at the apple, right? If the economy is going to be slower for another 5 or 6 months, I would imagine there's going to be a supplement.
Great. And I'll just read this one a little bit more since I'm not sure what's asking. My lack of accounting background. Guaranteed payments and S Corp distributions. Those might not qualify.
I don't think they would. I think that's more investment income. If you're an S Corp, you have pass-through earnings. And if they're guaranteed, I mean, I don't know. That's probably more of a legal question. But I think there's passive income and active income, as far as I understand, with S Corps. And if it was passive income from an S Corp, I highly doubt that would count I haven't seen any specific guidance on that in the FAQs. So one thing I will tell you is some firms, and this is some, I have no opinion on this. I've seen take a stance that if they're unclear on how this will work, you can apply for it and you might get the loan, right? But be careful between setting the expectation of getting the loan and getting the loan waived, right? So a lot of firms that have, let's say you were fortunate enough to get the application in early before they changed the rules on independent contractors, you probably claimed an independent contractor, right? So to the extent that the SBA approves the loan, and I would hope they wouldn't reject it, but let's say they approve it, chances of them waiving that loan amount later, because you were in fact claiming an independent contractor didn't qualify, is probably not high. You probably won't get that amount waived. You probably have to pay it back. So if you make a marginal call on something like that, I would just consider the fact that, it's more of a loan than a grant. And if people treat this thing as a loan, I think, firms that are not necessarily absolutely positively needing the money probably don't want to go through all the gyrations to get it, if they have to pay it back anyway within, I think, 24 months.
Great. I think we've handled all the questions that have popped up to this point. So do you have any last thoughts?
Good luck. Good luck out there. Find that banking relationship. That's the key. I'm hearing that the bankers are calling people on weekends and so forth, and stuff is moving through, albeit slowly. But I think so much of the process right now, and the frustration around it, is the fact that it is fairly opaque. You can't tell. The SBA is not sending emails saying we received your application or anything like that. You just have to trust that the machinery at some point is going to actually get around to this. So having a banker that you can talk to saying, hey, did I get everything in? How's it look? Have you submitted to the SBA? All that kind of thing. That's going to provide you with a lot of relief. And a lot of these questions are coming up early, like a lot of stuff brought up here. Again, the lenders are the ones that are really the important first step. My sense is if the lenders, which are the banks, have armies of people working on this, which I believe to be the case, everybody, all these people at Bank of America, all these people at Chase, all these people at all the top banks are all working super hard to get the funnel in. The SBA is going to be the bottleneck. So my guess is the bank's going to do a lot of the attest services. The SBA is going to largely rely on what they're doing because they can't test, probably can't validate every single loan that quickly. And the federal government is probably putting them under massive pressure to get the stimulus money out. So I think as long as you are working very closely with the bank, have really good rationale for everything you're doing, and the bank agrees, you're probably gonna be in good shape. At least from a loan perspective. Later on, when it comes to the converting the loan into a grant, that's a different situation. But really, I would say, just for the peace of mind of you and your clients, if you can find that banker, that key relationship there, you're going to be much happier with the process. Fantastic. Well, thank you, everybody. Thank you, Tim, for handling the Q&A with me today. Thank you all for joining. Good luck out there. Good luck with the PPP, tax season, clients, and everything. I hope everybody's safe and well. And we look forward to talking to you again soon. Appreciate it.